Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Tuesday, the 16th of May, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. I'm going to go for a usual regular run through in here today. Calendar, what we've had, what we've got coming up, what's important going into today, what's impacting financial markets from a macroeconomic, geopolitical, fundamental standpoint. Take a look at some articles from the major news wires, what is impacting the charts, and then take a look at those charts as well. So we'll start off, actually just want to give you a little bit of heads up in here. So this is basically on the home page at Trade Day, tradeday.com, and then it says category trading dash advice, and it's right at the bottom of the home page. You can see it down any of our pages in here, trading advice and tips. Okay, so you go down here. I just want to give you a heads up for people who haven't seen it yet. You can access it as well from the resources section of the members area. I'm not going to go down into there, because if I go down into there, then we're going to end up seeing you. You're going to be hearing the feedback on the webinar that I'm doing right now. So, but do check this out. We're populating this. We're getting regular stuff up in here now. A couple of things a week. We're putting up this macro matters, which is like a recap of the last week, a little look ahead to the next week. So a bigger version of what you see anyway that I post in the members area, that bulleted, that short weekly update that you see in the members area, along with the technical analysis. So this is just a bigger version of that, and obviously available out to the general public. And then we have these, various other articles in here, US CPI in here from last week, and then key data and central bank events traders need to watch. That was from the week before when we're looking at the Fed and stuff. So yeah, just take a look at that. It's a good resource, and we're populating that area. So I just want to give a heads up on that. What we got coming up. Well, actually, I'm going to do a step back to yesterday. So yesterday in here, the main event in the afternoon was central bank speakers, Fed speakers. So in here, we've only got a couple of them on here. We had, so this is looking back to yesterday. So we've got in here, we got Bark in there and Kashkari there, and can't see any of the others, but I tell you there were some others in here because I've got the article on it in here. So we did have a few other Fed speakers. I don't know if they picked up in 5 things to start your day in here. No, they haven't got it in here. But we did have various speakers, and basically we had Kashkari was up there speaking. Kashkari was his usual hawkish self, and then Bostic was speaking as well, fairly dovish as usual as well. So we didn't get anything really significant out of that, those speakers yesterday. Winding forward to today. Actually, overnight, so let me go to the last yesterday, because we're picking up the Chinese data overnight. Chinese data disappointed. So retail sales and below expectations in here. Also Chinese industrial production. Actually, some of these numbers are not populating it, but I can tell you that they were worse than expected. I do have an article on here on that. So China's waning economic recovery spurs call for policy action. So looking for actually potentially maybe an easier monetary policy coming from China, from the PBOC, because industrial production, retail sales missed forecast. Youth unemployment rate surges to a record high, 20.4% in China. So all of that is significant on the back of data we had, remember, last week from China. The inflation data was very low, but they got PPI data from China, the factory gate prices, as it's called, PPI, was actually very, very negative. I think minus 3.6%. So China potentially going to export deflation around the world, which would be a positive, right, to slow the inflation we're seeing in the West and in the major global economy. So that would actually kind of be a slight positive. So, but certainly China, a slowdown in here, maybe echoing the fact that we've had the interest rate hikes around the rest of the planet. China slow to come out of obviously COVID restrictions, and at the moment the China growth story waning in here somewhat. So we had that overnight as well, and then just forwarding forward to today's calendar. This morning, UK employment report. Generally, you can see most of this is in red. The employment change actually was slightly better than expected, but the average earnings lower. That's better, remember. Lower is better, but the claimant count higher than expected. So a slight negative overall, you would probably say, but mixed on the employment report. Not a massive impact onto UK markets this morning. German ZEW in here. Is important data missed in here. You can see minus 5.3 on the economic sentiment. This is an investor survey. Okay, so it's a survey of investors for the investment outlook, and that came in worse than expected. So obviously a little bit of concern there coming out of Europe. Going into today, we do have a host of some more Fed speakers. Bostic spoke yesterday. We've got Mester coming up in 40 minutes. But the big focus really now for the day is going to be on core retail sales out of the US, expected at 0.4 in here for April. We're certainly going to be keeping an eye on that. And then the that's the core data, 0.4 up. The headline data 0.8 expected for April on the month-on-month data. So we're keeping an eye on those. If you are trading currencies, you are looking at the Canadian dollar CPI, so dollar CAD in here, obviously potentially got a big move coming in just under the hour in here with both the US retail sales and the Canadian CPI data. Going through the day, we do have some more data, 9:15. Don't forget industrial production and manufacturing production out of the US and various other. So we've got, Barr testimony in here from the Fed, Williams speaking later today, Logan speaking, Bostic, as I said, speaking later today. So a host of Fed speakers, keeping an eye on them. At the moment, though, we're not really getting anything new from those Fed speakers. Let's take a look at 5 things just to start your day out of the for the US Open in here. Yellen continuing to harp on. I mean, like stuck record. I mean, yes, we know, Janet, we're about to run out of money. I think everyone's aware of that. Could run out by be early June the 1st in here. Yellen. Just keeps going on. They are meeting today, right? And we obviously got a bid. We got a strong rally in risky assets yesterday. US futures leading global futures higher yesterday on the back of hopes that in today's meeting between McCarthy and Biden, we will get a resolution and a raising of the debt ceiling. That has kind of been anticipated by markets. That's what markets want. I think if you don't get that today, the market, when I say the market, I'm talking about the stock indices, they probably sell off. So just watching out for that going into today. So debt ceiling all in focus today alongside that retail sales data out of the US and the Fed speakers. Global fund managers now more pessimistic than they've been all year. That's Bank of America's survey, a fund manager survey in here. So, but sometimes that's a contrary indicator. I wouldn't read a massive amount into that. Michael Burry in here, big short fame in here, is going long on China, boosting investors. E-comment giants, JD, Common, Alibaba. There you go. And stock futures, little happening today, and we've already gone through what we're expecting going into today. What else do I have here? So Yellen warning, time is running out. Ding, 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 ding. Yeah, we know, Janet. Sorry to be so flippant, but I've never seen so much clamour around a debt ceiling discussion and raise. It happens all the time. But US on track for June 1st, default headline here. So what else we have? European data. A data fest, that's in the past now. We've already looked at the European data that we've had in here so far this morning. Again, more on the debt ceiling, more from Yellen in here. US on track for default, that's the one I just looked at. China's waning economic recovery, already looked at that. Another one on China, already discussed that. Haven's gain is US debt stalemate. So I'm saying, well, are they really? So yeah, maybe to an extent. Japan, by the way, the Japanese stock market, the topics, highest level since 1990. Remember, Japanese stock indices or at or below, levels from the 1990s. So, but Yellen's still going on about the debt ceiling, but Japanese stock the stocks are doing well, and Chinese data miss. We already covered that one as well. And here it is that topics rises to highest level since the Japanese bubble economy burst back in the last century. So, and in Japan, the Japanese stock indices doing particularly well in here because of the weakness of the yen that we're seeing overall throughout this year, because of obviously they're in a very low interest rate environment still. They haven't hiked rates like the rest of the planet has hiked rates. And equally, they haven't needed to because they haven't had the inflationary pressures that the rest of the planet has had. So inflation has stayed low. Interest rates have stayed low. The currency is weakened, and that's a fairly positive, place for stocks to rally. Given that we've got more negatives in the rest of the planet, right? Higher rates, higher inflation, etc. Okay, and stronger currencies. So all of that plays out for the Japanese stock indices doing fairly well in here. And then we're now just interestingly. So this is just, I think, on the back burner. Something we should keep an eye on. So now, obviously, the Fed are pricing in rate cuts, or the curve in here. We looked at the CME tool in here on a number of occasions. I'm not going to go. Well, I'll go for it very quickly. Still pricing in potential for a little outside chance for a hike at the next meeting, and then by July, though, we're still looking for rates to be pretty much where they are now. But remember, cuts being priced in for September, one cut, November, another cut, and December, another cut, down 75 basis points by the end of the year, according to the curve. But we are seeing rate cuts being priced in elsewhere. So August in Korea, October in India. So Asia starting to price in rate cuts coming out this year. Who's going to be the first central bank to cut rates? It'll be interesting to see that and when it comes through. And does that then lead to other does it need to then other central banks doing the same? What else do I have for you? So European markets are pretty much unchanged in here going into this morning. Just do a quick refresh on that, make sure they are still there. Yeah, pretty much still there. And if the US stock indices going into this morning, once it reloads up in here. So futures were marginally higher yesterday. Oh, these are not loading, but we're pretty much flat going into today. Right, let's take a quick look at it's logged me out. Log in here. Oops, wrong one. Let me go back to the live environment. So quick look in here, but we've still got these flag patterns kind of sideways in here. So that there is the S&P. So on the 30-minute chart, still very much caught in a range. We'll go to the daily chart. Inside pattern yesterday. Yesterday's price action inside the previous day's Friday's price action. At the upper end of the range still, though, for me, it all looks bullish. This still looks like a bigger flag, from the big that was 2 Fridays ago. 2 Fridays ago. The employment report has been chop fest since then. It's held this support area twice down here around 41.12, and for me, still respecting this downtrend line above that. Above like 41.55, 57 would look very bullish for me for a potential breakout on the S&P. It's coiling. No surprises, it's coiling. We've got the debt ceiling talks coming today, so it's probably going to break out post them. For me, I'm 65% bullish going into today. And here we are, and the Nasdaq leading the way higher. Why is it leading the way higher? Lower interest rate environment, lower yields, lower interest rates, benefiting growth stocks. Growth stocks, all in the Nasdaq, tech growth stocks doing better. So we got a dip lower back on Friday, reversed that yesterday, and sitting right at multi-month highs for the Nasdaq. If we look in here, looking very bullish. There's the Friday impulse move. There's last week's impulsive move higher through the CPI data. We did get a dip and a rebound, but then look, sitting right back just below the high. So looking solid in here going into today. What else do we have in here? Quick look at gold and oil. Gold, first of all, drifting lower in here. I'm not aggressively bearish, but should we take out these lows again? Should we get below 2005? It looks like we could be quickly down to like 1980. So gold does look wobbly in here. There's the daily. Here's the 30 minutes. It's come down. It just peaked. It just nipped below that level there here. And then we're just holding there. But should we give up like 2006, 2005? It looks certainly a lot more vulnerable. Let's take a look at oil. We did get a decent rebound and holding in here today. I was fairly more negative going in today. Holding in just about in here today, but so it put in this kind of topping pattern and then rebounded. But I think whilst below, you see it failed at this peak in here 3 times, 4 times in this area now. So oil, whilst capped below 71.80, 85, it looks kind of more negative. Above there, it looks more positive. So that's kind of your pivotal point there. All right, guys, I'm going to wrap it up there. Any questions from anyone? Thank you to the EIRR show. Happy Tuesday to you as well. Anyone? No? Okay, I'm going to wrap it up there, guys. Going to wish you all a great trading day. Take care, stay safe. I'll be back with you tomorrow for another bull versus bear webinar. Take care.